Good evening, everyone. Time for another silver update. This is the 1 hour chart of the Dow Jones Industrial 30 provided by netdata.com. You can click on the link below. This is a very ominous chart. I've been following this for the last couple days. You can see we have the primary trend line that goes back to last November, and it's been breached. Initially was breached in late March and now has been significantly breached in April. And you can see we are in a sort of free fall. This is a sort of thing that the stock market tends to do. It tends to, when it goes down quite rapidly. And you can look at the close here. The close seems to be fairly ominous. Normally when you see the stock market close on the lows like that, you can expect further selling. Now the MACD is quite a bit oversold here, so we may be due for a bounce, but then again, if we move out further on the charts, the MACD is actually just rounding off, so there may be quite a bit of downside to go. If this lower MACD, which is down around the 100 point or so, if that's breached, we may go significantly lower from there. The support line that I've drawn here is a very important support line, first of all because it is this high that was reached back in October, back in the fall, and it was kind of a breakout point for the Dow. And the other point and reason why it's important is because this really marks the beginning of the year, the Dow return for the year. So you can see we've given back more than 50% of the yearly gains on the stock market in just a very brief amount of time. And if we reach this blue line here at about 12,300 on the Dow, we will have given back 100% of this year's gains. So that's a very significant line. I do expect that that line will be reached. You can see that this support line right here, which is the low that we had around the beginning of March, has been breached, and we seem to be falling through it. So I do expect that we will see further downside on this before it's all over. Now, I've been following the Apple story because I put in the Apple bubble story, and Apple for the last couple days has resisted the downtrend that is in the overall market, and just today it started to give way. So Apple had been gaining while the rest of the market had been falling. You can see that Apple seems to put in some kind of a top here up above 640, and we may actually get a significant downdraft. Now there's a large number of untested gaps in Apple. You can see a big one here, there's another one here, and there's another big one here, and a small one there. So Apple really needs to probably correct back to the 422 level to test all of those gaps. Now if we go back, we're probably not going to see them on the long-term chart, but they're actually gaps all the way up. You can see there's the one there, and there are some others, but they don't show up on this chart because it's too long term. Kind of a gap here, but it was filled. So this point here I'm going to call 423 is going to be probably the point we correct back to when we finally do get the serious correction in Apple stock. Now the other story I wanted to go to on the charts that's really important, I started noticing developing today specifically, was that at a certain point today the metals began to strengthen in the face of that tremendous Dow downdraft. So we'll pull up the 30-minute chart on gold, and we'll go ahead and overlay the Dow on top of that, and that will give us the relative performance. So you can see the Dow is dropping dramatically while gold is rallying. This is a big divergence. It's not the largest we've seen. There was a pretty big divergence here, but you can see they kind of followed each other. So this is the first real divergence where we've seen them going in opposite directions. Now, there was an article today calling for a 1-to-1 at 800. A lot of people have called for 1-to-1 Dow and gold. Some have said it's going to be 800 or 1,000. Some have said it'll be 10,000. Some have said it'll be 100,000. At some point, they predicted it's going to 1-to-1. But this divergence is very serious. Now, we have seen it in the past. I can't show you where it's on the long term. I'll have to pull out to the weekly. But if you were following the markets in 2008, we actually had a divergence during the financial crisis. It's hard to see, but if we zoom in right about back here in the fall, you can see we had a significant divergence here. Now this one actually turned around and changed directions with the Dow rallying and then gold falling. So we have seen that sort of divergence. My prediction is that if it follows the pattern that we've seen in the past, what they tend to do, because normally it's a deflation scare scenario, they will continue to sell off the stock market, and then eventually the metals give way and follow to the downside. That's what we've seen in the past. That's what I'm predicting. But don't quote me on that. That's just a guess. Now over to the question of the day. This is from BeagleNut. He says, "Hi, Brother John F. As a newbie to the forum and your website, I'm a bit confused by the term stacking. As I watched through your past YouTube videos, I noticed that you use the term quite frequently. Can you explain exactly what you mean by stacking silver? Is it the same as dollar cost averaging? I purchased my first Silver Eagle back in 2001 and paid $6.99 per coin. Bought 500 ounces monster box. Waited several years to break even. I'm glad I had the fortitude and foresight to hold on. Thank you, Caroline." Some people would mock that question. It's actually a very good question, and Caroline has actually already been stacking. She just apparently doesn't know it. Stacking silver is just referring to the act of taking physical delivery, and stackers are people who like to pull out the coins and stack them and count their stack and compare their coins, and they like to experience the physical possession of the metal. There's something about taking physical possession, having the metal in your hands. A lot of people have done YouTube videos and written stories about how they've handed people an ounce of gold or an ounce of silver. When people have an ounce of silver in their hand and they get to handle it, they really get to see what its worth is in a real way. It's something of substance. So stacking is very important, because stacking is really the process of remonetizing silver. Silver has been demonetized by the powers that be through various conspiracies and machinations over the course of the last 100 to 150 years, and they have successfully demonetized this most important precious metal. Now, one of the absolutely most important elements of money is that it is a store of value. That is one thing that money must possess, and that is something that the fiat currencies don't possess. So gold and silver don't currently possess the medium of exchange aspect of money, because people just aren't exchanging them right now. But they certainly do possess the store of wealth aspect of money, which paper money doesn't. So as silver stackers and others, and if you saw on the blog today, Max Kaiser announced a second wave of the Silver Liberation Army, the stacking army, to try to bring down JP Morgan. A lot of people think it's a big joke and laugh at it, but if you'll remember, the last time Max announced that, it might just be a coincidence, but we did have the run to $50 silver before they smacked it down. So stacking is very important, because it is the act of the people taking back their wealth from the fiat money system. When they stack, they're actually saving And saving money is very important. You can't have a healthy economy without savings. Now, the Keynesians that currently run our economic system are not interested in you saving anything. They want to do everything they can discourage you from saving, including lowering interest rates to nothing, punishing savers, and doing everything they can to prevent saving. But real saving is going to be stacking real money, and in the process of doing so, you're actually remonetizing the metal silver, because the more and more silver that is stacked, the more and more is taken out of the cartel's hands. And because of the real shortage of silver and the very, very low price, as each of you stack silver, you're contributing to the end of this manipulative system. So very good question and very important thing to do. Now I want to jump to an article for the night. If you remember last night, I covered Gary North's excellent expose of the welfare state and welfare dependence and how tremendously damaging that is. One of the commenters mentioned that you're not talking about the public unions, and that's a much bigger problem. I absolutely agree. The government workers is a huge problem. This is an article that Gary North also cited in a recent article that he wrote, but this is from the National Review. This is called Leviathan by Ian Murray, and this is how many work for the government, and this is, I'll go over this briefly. How many Americans work in government? That's a difficult question to answer. Officially, as of 2009, the federal government employed 2.8 million individuals out of a total U.S. workforce of 236 million, just over 1% of the workforce. But it's not quite as simple as that. Add in uniformed military personnel, the figure goes up to 4.4 million. There are also 66,000 people who work in the legislative branch and federal courts. That makes the figure around 2% of the workforce. Yet even that doesn't tell the full story. A lot of government work is done by contractors or grantees, from arms manufacturers to local charities, environmental advocacy groups, university researchers. A lot of work they do is funded nearly entirely by taxpayers, so they should count as part of the federal government. Unfortunately, we can't ask the Office of Personnel Management how many government contractors and grantees there are. They don't keep such records. Instead, we can ask Professor Light of New York University, who has estimated the size of these shadowy branches of government. And it goes on, and he then goes and talks about other workers, the ones that are in state and county, postal workers. There's GM, of course, now, which is a government-run motors. And he goes through all that and gets down to the very bottom. When we add up the true size of federal workforce, civil servants, postal workers, military personnel, contractors, grantees, bailed out businesses, and then add in state and local government employees, civil servants, teachers, firefighters, and police officers, we reach the astonishing figure of 40 million Americans employed in some way by government. That means about 17% of the American labor pool, 1 in every 6 workers, owes its living to the taxpayer. So this is something that I have been harping on for a long time. My analogy is that there's a certain number of people that are pulling the cart, there's a certain number of people that are riding in the cart, and the number of people pulling is getting smaller and smaller as they get out from the front of it and jump back in the cart. And we're going to get to the point where it just comes to a standstill because there just aren't enough people contributing, and too many people taking. The system is going to collapse. There's no question that this system is going to collapse. And then the people who are getting their money from the government are going to be the losers in this. It doesn't matter whether they're taking it in welfare or whether it's unearned tax credits or whether it's government work. It doesn't matter where you're getting it, government pensioners. If you're getting your money from the taxpayer, from the government, or printed money, eventually you're going to lose out because the whole system is bankrupt. Now, I wanted to make one more comment about this because I have commented frequently, especially about the European systems and commentaries about socialism and how that's a failed system. Now, with all of the negatives that there are about socialism, and there are many, I would have to say that the U.S. system as it currently stands, with these 40 million Americans working for the government, is actually a worse system than socialism, especially than European socialism. You can look, for example, at Norway, and that's held up to be one of the successful examples of a type of hybrid socialism that goes on there. Now, Norway, of course, has that tremendous oil resource that they use. But what's interesting about it is that many of those economies actually have the people that work for the government working for productive means. So, in other words, if you have a system of socialism where you actually have a socialist system of mines and a socialist system of transportation, a socialist system of manufacturing even, maybe something like Airbus, or a type of system where you're actually creating wealth, maybe you could put GM in that box, I don't know. But if you have a system where the people who are working for the government are actually adding real value to the system, that is going to be preferable to the current system that we have in the United States. These 40 million Americans, the vast majority of these people add nothing to the real economy. And in fact, they take away wealth from the real economy, whether it's TSA gropers or IRS auditors or regulators, or all of these people who strangle and stifle small business. And many of these people are net drains on the economy, not just their salary, but the impact of the regulations and all the things that they do. So it's my contention that the United States is actually in a worse situation than many socialist nations, because so many of these people are not only not productive, they're actually they actually destroy productivity in the nation. So it's clear that a bankruptcy is coming, and if you are one of these people, you need to make other plans, because when the money runs out, they're going to let half or 3/4 of these people go, and they're going to have to find work in the private sector. So back to the charts, we're seeing a tremendous divergence in the metals right now and the stocks. There seems to be a small liquidation going on. The silver price is not quite as bullish as the gold price, but you can see here that there is a small rally going on in silver. My question of the morning was, would it hold 31? It seems to be holding 31, and it's rallied quite strongly from there. A good nearly 80-cent rally, 70-cent rally off the bottom, while the stock market is dropping significantly. So the question is, will the stock market continue to drop? I think it will, and if it does, will the metals turn around and follow it down? My bet is there's a 75% chance that's going to happen. We'll have to wait and see, and I'll talk to you next time.